Hey everyone, welcome back to Corporate Decoder, the place where we decode all the secrets hidden in plain sight within corporate filings. Today, we're diving into a filing that looks like a simple update, but there is a little more going on under the surface. We're looking at a Form 8K from Scilex Holding Company, which is essentially a report for major events that shareholders need to know about right away. Think of it as a company's way of sending out an urgent bulletin. Now, Scilex Holding Company, or Scilex as you might see them on the stock market, is a biopharmaceutical company. They're focused on developing and commercializing treatments. The filing talks about their common stock and warrants, which are basically options to buy shares of that common stock. In this case, they're dealing with warrants that have an exercise price of $402.5, which is a pretty high price. This suggests these warrants are likely tied to some significant past event or future valuation. The key event here is that on the 19th of February 2026, Scilex entered into a new warrant agreement with Warrant Pharmaceuticals Incorporated. So, one company is giving another company a new warrant. Let's break down why this warrant was issued. Basically, Warrant was supposed to receive an amortization payment, which is like a scheduled loan repayment, from Scilex on the 1st of October 2025. But instead of taking that cash payment, Warrant agreed to defer it, in exchange for deferring that payment. Scilex is issuing Warrant a new warrant to buy 100,000 shares of Scilex common stock. The initial price to buy these shares through the warrant is set at $20 per share. This new warrant, called the February 2026 warrant, is available to be used right away. Scilex made this deal under an exemption from registration rules, which is common for these types of private placements. They've also promised to file for registration of the shares covered by these warrants soon, so that Warrant can eventually sell them if they want to. This warrant has an expiration date of the 13th of December 2029. The $20 exercise price can change. It can be adjusted if Scilex does things like a stock split or issues stock dividends. There is also a provision that if Scilex sells new shares at a price lower than the current exercise price, the warrant's exercise price could be lowered too, but it won't go below $8.22. If Scilex doesn't have an active registration statement for these shares when Warrant wants to exercise the warrant, Warrant can exercise it without paying cash, but they'll get shares instead of cash usually. There is also a limit on how much stock Warrant can own, capping it at 4.99% of the outstanding shares, though this can be increased to 9.99% with prior notice. This is a common feature to prevent a single warrant holder from gaining too much control or becoming a hostile takeover threat without the company's full awareness. It is designed to keep things manageable. The agreement also has clauses about what happens in case of major company changes, like a merger or acquisition. If such a fundamental transaction occurs, the buyer usually has to agree to take over Silex's obligations under the warrant, if to raise a change of control. Warrant might have the right to have Scilex buy back their warrants for a price based on their current market value, not just the exercise price. This protects Warrant in case the company gets bought out. The actual warrant agreement and the form of the warrant itself are filed as exhibits to this report, which means they are attached documents you can look at if you want all the nitty-gritty details. This next part is really just confirming what we already discussed. The issuance of this February 2026 warrant and the future issuance of shares when the warrant is exercised are being done under exemptions from registering with the SEC. This means they are not being offered to the public broadly, but rather directly to Warrant. And then we just have the list of exhibits, which are the official documents like the warrant agreement that support the information in the report. Now, what is the big picture here? This filing isn't about a major financial earnings report, so we aren't digging into revenue or profit numbers today. Instead, it is about a specific deal between Scilex and Warrant. Scilex is essentially getting some breathing room on a debt payment by giving Warrant a stake in the company's future upside through this warrant. Warrant in turn is deferring immediate cash in favor of potential future gains if Silex's stock price goes up significantly enough for the warrant to be valuable. The $20 strike price on 100,000 shares is a pretty substantial chunk. If Scilex stock were to climb, say, to $40 or $50, this warrant could be worth millions. The fact that they're giving a warrant instead of just paying cash could signal that Scilex is managing its cash flow carefully. They are prioritizing keeping their cash on hand for operations or other investments, rather than